Vanessa is going to be talking with us today about some beginning options when it comes to investing. Vanessa is with US Bank, and way more importantly than that, she has a heart for VAs and for multicultural markets and diversity and helping new homeowners into basically getting in the game so that you guys can have an opportunity to really get ahead in life. So Vanessa, do you want to talk to us for a few minutes about investing and how people could maybe get into the market if they're thinking about getting into Airbnb or their first investment? Thank you.
Absolutely. So thank you so much, Angie, for the opportunity. I was really jazzed and I enjoyed Michael Cobb's presentation on investing internationally and abroad because I've not done that myself. But I was like looking at all those locations and the pricing, and I was like, well, that looked really tempting. So for today, I have the pleasure, and I want to talk to you about how to be a smaller investor, a mom and pop investor. For those that are thinking about, well, you know what, I've always wanted to have a second home or an investment property or additional income beyond my pension or 401k and God knows Social Security may not go that far for us as we age and progress and look at maybe retiring or we're already there. So what I'm going to do is share a PowerPoint deck that I share when I speak about how to become an investor. And for this particular seminar, we're only going to be talking about 1 to 4 units, which is residential lending. That's my expertise. I've been in lending for 25 years, and I've also been an investor for 25 years. So I really enjoy looking at a property and saying, okay, is that going to be a long-term investment or a short-term investment? Am I going to make a profit out of this? Um, does this property make sense? Does the numbers pencil in? So I'm going to go over some formulas and how to start thinking about investing. I'll also share some free resources for you as an investor because a lot of this you're going to need, you could do it yourself. If you're handy, even better. But we'll go through it a little bit. And then if I have enough time, I'll talk to you about my happy place that I started as a second home and now has turned into an Airbnb experience in Temecula. But that will be at the end because I really want to provide you some tools and some thoughts and a plan for you to start thinking outside your comfort zone and maybe exploring options to be a small mom and pop investor like myself. So we'll go ahead and get started. I'm going to go ahead and share screens with you. Oh, thanks. Oh, can you let me share screens, Miss Angie? It's on the share screen. I'm now a millennial because of the pandemic. I'm really good with technology. So where it says share screens, then you can go ahead and let me have control to share my little presentation.
You are able to share screen now, Vanessa.
Oh, thank you. Awesome. Okie dokie.
Thank you, Kang.
Okay, Tina. Alrighty, let me see when, oops, page up. 1 second. Technical difficulties. Escape. Okay. So let me know when you can see my screen.
I can see it, Vanessa.
Okay, awesome. Okay. So this is for investors. This is a presentation we recently did. And if you want to learn more about investments, you've come to the right place. So what we want to do is the pros about buying an investment property. Like, well, okay, what are the benefits? Well, one, you're going to build up equity. You may potentially build up equity for future investment. So if you make profit on that property and there's equity, you are sometimes able to do a cash out, take that equity out and reinvestment for more properties when the property appreciates. Also, that interest that you're paying on that mortgage is tax deductible. You can go ahead and apply it for that. There's residual income, and what that means is every month you're going to have a paycheck, granted if you have great tenants and are able to make that payment, that rental payment. So that residual income will be every month, year over year. And the great thing is rents normally don't decrease. Although with the pandemic, it's been an anomaly, it's different, but you are able to build rent month after month. And then every year it does increase if you do a good rental contract, as well as one of your tenant leaves, then you have the opportunity, depending on where you live, and if it's not rent control, you can go ahead and put it at current market rate. And 9 times out of 10, the current market rate always goes up, depending on where you are in the United States or what city. For example, I live in Southern California in the Los Angeles area in Pasadena, and I could tell you it is insane the amount of rental payments that you do. So sometimes you want to start looking at, okay, what are the going rents for a 1 bedroom, a 2 bedroom, or 3 bedroom? So you want to look at that residual income. Then you become your own boss. You're going to have another schedule that you're going to be able to do a tax write-off on some of the expenses that you do. So then you are now your own boss. And you're building generational wealth, because if you don't sell that investment property, then you can give it to your heirs as well. So you're building up that generational wealth. And most of us have been able to build some wealth. We weren't born wealthy. I was not born wealthy. So with real estate is one key factor on how to invest that and grow your wealth, or a really good investment like stocks and bonds, or your own business. So that is one of the benefits. And also you're going to be rooted in that community. You're going to have vested interest, like what's going on in that community. Why do you like living in that property? Why are you buying in another city or state? So you're rooted in the community. You really want to help it thrive. So you get some roots down. Also, before you do that, you really want to go ahead and get pre-approved with a loan officer. Go with your bank, go with somebody that you know and trust that is in finance, and get your paperwork ready to see what you qualify for and if that's an option for you. They're going to ask you for all your life history. Where have you lived and worked the last 2 years? They're going to look at your pay stubs. They're going to look at your profit and loss if you're self-employed. So it's really important that if you're thinking about doing this as an idea, get with a loan officer, somebody who's qualified that does investments, and find out, I'm thinking about buying an investment property. What do you think? Could we start analyzing my documentation, my paperwork? And then they're going to go ahead and review it and give you a plan of attack. If you have way too much debt, well, it's time to start paying down some of that debt, or credit card or school loans. So it's really important to know where you are financially to get this process started. So what you want to do is look for factors, what lenders, most lenders don't want to be a first-time home buyer because it's a big investment and they want somebody that has a little bit more experience. Those are generals. You want to start looking at the property type if you're going to be investing. Now, for me, I look at the number of bedrooms and bathrooms, the location of the property, because the more number of bedrooms and bathrooms that property that you're going to be renting, there's more profit involved. You have more likelihood that the tenant is going to be with you longer term rather than buying a 1 bedroom or a single. That's just been my experience, and that's what I normally recommend, because the bigger the house, the more square footage, and the more number of bedrooms, that really helps you have a bigger cash return. You're able to rent it whatever the current market rate is. They also look at debt to income ratios. So the less debt you have, the better it is for a bank to give you a really good interest rate and say, you know what, that is a really good buyer. He or she is qualified and they're able to afford to buy the house. And we'll get a little bit more technical on what banks normally look at, and I'm talking generalities, because most banks and mortgage companies operate this way. I know I've been doing this for 25 years. So when I'm giving you information, it's very general, because I want you to have good information to walk away with and start thinking about tomorrow, planting that seed of investment. And that's in my background. As you see the little plant of seeds, the house keeps growing in appreciation. And start thinking about some down payment. So credit is super critical. You want to go ahead and make sure that your credit is up to date. But let's think of something to consider. You really want to start looking at that school location. Where is the number of bedrooms? And you want to start looking at the rents in the area as you're looking to buy. That's really important. You want to make sure that the property is in good condition, and that hopefully there's no rent control, because that you can only go up, for example, in Los Angeles, 3% per year. So as an investor, you really want to look for that. You want to work for look for a realtor who has experience selling the investment properties. So when you're thinking about buying a single family residence and you're living in the property, what you want to do is look for the best pricing. When it's owner occupied with multiple properties, you're going to get the best rate with the bank because you're living there and you're renting other units. It's less risk. The likelihood that you might default or sell the property and not care is very small. So you're going to have the best interest rates when you live in the property, if you don't mind having a tenant living in the property. So that is something I truly recommend for those that are thinking about being a first-time buyer or an investor. When you live in the property, the rates are a lot better and there's less risk. So you're going to have the best pricing. Typically, you can buy as little as 3.5% down with the program for FHA, or you're going to be putting 10% down or more when you live in the property. As an investor, the guidelines change, and I'm going to be happy to share this PowerPoint presentation with Angie so you can use it for your reference. I'm going kind of fast only because I'm limited with time, but I want to give you the nuts and bolts of what we're doing. When you're non-living in the property, well, guess what? That's more of a risk. So most banks are going to require 20% down. I know that's a lot of money, but start thinking, does it pencil in? If I put 20% down to buy these units, what is that going rent? Will the property pay for itself? Will I be making investment and making some money? Will it be a positive cash flow? And that's what you want to be, positive. Whenever I buy a property, I start looking at all the numbers. Okay, how much does this cost? What are my property taxes? How much am I going to have to invest in this property and make it look wonderful and habitable and livable? And then after all of that, what is my true payment? And then how much can I rent each unit out for? So if you're making a positive return on that investment, that's a good thing. If you're going to keep it for the long term, like for retirement, because God knows my Social Security is not going to go very far. That's why I want to always make sure that the numbers work and that you're working with a team that knows it, with an awesome realtor like maybe Angie, who also has experience in this world with investments. So you want to work with a partner that you know and trust, and also a lender that you know and trust that has that experience that can really help you, because you want to build that team that says, yes, I understand what you're going through. So most banks look at credit score of 620 and above. The higher the credit score, the better. They're looking for reserves in the bank. So you want to go ahead and start getting qualified. Now, there are advantages and disadvantages. The advantage is definitely income. You're going to grow equity. But guess what? There's risk right now that the tenant may not pay. You might get somebody who's not going to be in it with you. You're going to be paying taxes and insurance, and you're still responsible for that. You're actively involved in managing that property, unless you get a property manager, and then they get a piece of your revenue and your profit. But that's okay. It depends on what's comfortable for you. So there are pros and cons when you're looking at investment properties. Here is the step of how you go ahead and move in. I will share this with everyone. And here's that team of people that are going to help you buy that house. It starts with that loan officer, that realtor, the tax preparer, because you have to let them know you're going to be buying an investment property, the home inspector. Make sure the house is livable and habitable and what's good and bad with it. So all of these teams help work with you. So you have to be prepared. Now, I'm just going to quickly stop talking about investments, but really tell you about my decision, and I'll make it quick. And Angie, just text me when you tell my time is up. So I actually about 2.5 years ago bought a second home in Temecula. I live in Los Angeles. And Temecula to me has always been one of my happy, fun places that it's, far away and close enough for me to drive. I do love Napa, but that is like a 7-8 hour drive from here from Los Angeles. So for the last 20, 30 years, my husband and I, we've been going to Temecula for a little weekend getaway. And what's interesting is they kept having little wineries, they kept growing, And I really like that old feel friendly environment. So about 3 years ago, 3.5 years ago, we started seriously looking at our happy place for a second home. My husband's like, let's just get another home. I'm like, are you kidding me? Why? We're happy here in Los Angeles. We have our roots here, our family. But as time went on, we decided to venture out and go for it, buy something in Temecula. So we bought a diamond in the rough, a total fixer upper. But again, location, location, location. And we ended up getting this beautiful house in wine country, in the heart of wine country, which is about 8 miles off of Rancho California. So we kept looking at different homes, different areas, and it just called my name. I just felt really comfortable there. And it's not that big, it's in the Riverside County. And when we're looking for homes, again, because I'm in lending and I've been doing this a long time, I always look at it from an investor lens. So I looked at the price per square foot, what was going on in the market, the trends. So you have to do your homework as an investor. And it took us about a year until we finally realized what area we liked the most, because we looked several areas like Fallbrook, Duluth, the city of Temecula, and we ended up going in the county, in Riverside and the outskirts, where there was a lot more land. So we ended up doing this investment, and never in my wildest dreams did I think we would have a pandemic. So it was my happy place to go to because we have 5 acres and everything is spread apart. So it worked out really well with the pandemic. But with that, the prices went up really fast. So when I purchased this house, my price per square foot was about $202 per square foot. And now the value is between $500 and $515 per square foot. So as an investor, this is a fantastic investment because the property went up. So when you're looking about buying, always use it. Yes, I'm an emotional creature. I use my emotions, but really do the math. Does it make sense for you to buy this home? And let me stop sharing here. So there's a method to the madness. There's math involved, but do your homework. Work with a great loan officer and a realtor that can explain some of this stuff, and it has to make sense for you in the long term. Now, fast forward, I ended up putting the house on Airbnb because of the need. People want to get away. And lo and behold, my happy place now, I'm able to share it with a lot of friends and family. And it's worked out really well for me. It's like running a hotel. It's a little bit more work than a rental because you're more involved in it's a short term tenant that's going to be there, a family, a guest. But in the end, always look where it's going to be easier for you to invest. I am a firm believer of investing local so you can see and build those relationships with your tenant and be close enough to the property in case of an emergency. So
I
I just
love
wanted to
what
share
you
that with
said about
everybody.
that. Like being local, right? And
Yes.
looking into local. So I don't want to cut you off, but we're going to end in a few minutes here and I want to give people time for questions. But I hope you guys caught what Vanessa just said about, you already know your local area. And part of how we're able, somebody coined me a gypsy earlier in my session because we do the Airbnb thing too. So part of, living that gypsy life is starting to rent your own property, and then at a certain point in time it basically kicks you out because your property is rented and there's no room for you in your own inn. And
This
then you
is
just
true.
watch, rinse, and repeat that Airbnb process while you go travel and have fun and do what it is that you want to do in life. So
Absolutely, Angie.
thank you, Vanessa. That was such
My
good
pleasure.
information. I hope that you guys really got a better understanding of real estate today and making smarter decisions in real estate. I want to just thank everybody, especially the YPN crew. You guys did a great job. Accelerate Capital, thank you for hosting this platform for us. Thank you for setting up the Zooms. You guys were great. NAWRB, thank you for getting out the word to all of your people across the country and across the world. You guys are absolutely amazing. And Face Haven, thank you so much. You had such a challenge with your presentation and you still nailed it. So way to make credit interesting, right? So, But I just want to say thank you to everybody. It takes a village to put on something like this. So definitely, if you go to homeownershipday.com and click on the sponsors page, please do check out our sponsors. You can click through. There'll be videos for you guys to register on, and we do this event every year to help educate you.